Hello students, in this video we will see a numerical example on calculation of working capital, okay, or estimation of working capital. So the information is given about a company, Skylight company, uh, for the calculation of the required amount of working capital. So they've given the three elements of cost: raw material, direct labor, overheads, and per unit cost is given, the total cost is given, profit is given, and the total selling price is given. And other information is given regarding the raw materials. First point is raw materials are in stock on an average for 1 month. Second is regarding the work in process, it is for half a month. Finished goods are in stock for 1 month. The credit allowed by suppliers to us is 1 month. Then the credit allowed to debtors is 2 months. Lag in payment of wages is 1.5 weeks. Lag in payment of overhead expenses is 1 month. Then they have also given that the 1/4 of the output is sold against cash. Now here we will have to calculate the remaining amount, that is 3/4 amount of the sales will be credit sales, and that will be taken for calculation of credit sales, that is the debtors. And the last point given is the cash in hand and bank balance. It is expected to be 25,000. So you are required to prepare a statement showing the working capital needed to finance a level of activity of 1,04,000 units. So for financing a level of activity of 1,04,000 units, how much working capital will be required, that has to be estimated. So we all know that working capital is nothing but the total current assets minus total current liabilities. So what we will have to do is we'll have to find out how much money will have to be invested in the current assets, in the form of raw materials, in the form of work in process, in the form of finished goods, in the form of debtors, then again cash and bank balance. And then we have to also estimate the amount of current liabilities. And then current assets minus current liabilities will be the estimated amount of working capital. Students, to solve this example, we'll have to prepare some working notes. So the first working note will be the assumption that there are 4 weeks in a month. That means you have to write a note. It has been assumed that a time period of 4 weeks is equivalent to 1 month. Then again, second working note is regarding the degree of completion. So in this example, the degree of completion of work in process is not given. So we have to make an assumption. So it has been assumed that 100% degree of completion with regards to material, and for labor and overheads we have to assume that the degree of completion is 50%. And again it is also stated that wages and overheads accrue evenly throughout the year. The third working note is profit has been ignored and debtors have been taken at cost. Now we have to take the debtors as at cost because the amount involved will be only the cost and not the profit will not be involved in that. We have to calculate only the amount of working capital required, so we have to take the cost and not the profit into consideration. Then the fourth working note is related to the weekly calculations regarding the three elements of cost: raw materials, labor, and overheads. Now the annual production is given as 1,04,000 units. So first we calculate weekly average cost of raw materials. So 1,04,000 is the annual production, multiplied by 80 rupees is the per unit cost of raw material, divided by 52 weeks. So in a year there are 52 weeks. So that comes to rupees 1,60,000 per week. Then second, the calculation is related to weekly labor cost. So again 1,04,000 is the annual production, 30 rupees is the labor cost per unit, and divided by 52 weeks. So the weekly labor cost comes to rupees 60,000. And third, we calculate the weekly overheads in a similar fashion. 1,04,000 is the annual production into the overhead cost per unit is rupees 60 divided by 52 weeks. So the weekly overhead cost is rupees 1,20,000. So now let us see how the working capital estimation is done. So for that we'll have to prepare a statement showing the working capital requirement. It will have 3 columns, particulars column and 2 columns for the amount rupees. So first we start with the current assets, because working capital, as we know, is the excess of current assets over current liabilities. In other words, working capital is total current assets minus total current liabilities. So we will start with the current assets. Now in the current assets, the first item that we'll be taking is the stock of raw materials. Now in the example, it is given that the stock of raw material will have to be maintained for 1 month. So we have assumed that 1 month is equivalent to 4 weeks. So in brackets we have written 4 weeks, and we have in the working note we have calculated the weekly cost of raw materials as rupees 1,60,000. So 1,60,000 into 4, it comes to rupees 6,40,000. So stock of raw materials, write in the outer column 6,40,000 rupees. Then the second current asset is stock of work in process. Now the work in process, second point is given, materials are in process on an average half a month. So half a month will be equivalent to 2 weeks. So we have written in brackets 2 weeks. So when we calculate the work in process, we'll have to calculate it element wise. That means in the work in process there is some amount of raw materials, some people are working, so there is some labor cost in that, and there are also overheads involved in the work in process. So we have assumed that raw material will be taking as 100% degree of completion. Direct labor and overheads will be taking as 50% complete. So first we calculate the raw materials. So we know that 1,60,000 is the weekly cost of raw material multiplied by 2 weeks. So it comes to rupees 3,20,000, which will be written in the inner column. Then we calculate the cost of direct labor. So weekly cost of direct labor is 60,000 multiplied by 2 weeks into 50%. 50% degree of completion we are taking. So that is 50 divided by 100. So it comes to rupees 60,000, and that will be written in the inner column. Similarly, overhead cost. So overhead cost per week is 1,20,000 multiplied by 2 weeks into 50%. It comes to rupees 1,20,000. Now we have calculated this element wise. Then we take the total of all three elements of cost, and then we write it in the outer column. 3,20,000 plus 60,000 plus 1,20,000. It comes to rupees 5 lakhs, and it will be written in the outer column of the working capital statement. Then the third current asset is the stock of finished goods. So now in the example, the stock of finished goods, it is given in the third point. Finished goods are in stock on an average for 1 month. So we have taken 1 month as equivalent to 4 weeks. So here in brackets we write 4 weeks. Now stock of finished goods also has to be calculated element wise, because all three elements are present in the stock of finished goods. So raw materials weekly cost is 1,60,000 into 4 weeks. In the inner column you have to write 6,40,000. Then direct labor weekly cost is 60,000 into 4 weeks, 2,40,000 in the inner column. Overheads 1,20,000 into 4 weeks. Inner column will write 4,80,000. Then again we take the total of all three elements and we write it to the outer column, 13,60,000. Then the fourth current asset is the sundry debtors. Now about sundry debtors in the example, the point is fifth point, credit allowed to debtors is 2 months. So 2 months will be equivalent to 8 weeks. So in the brackets we write 8 weeks. Again debtors also we need to calculate element wise. Now here in the example they have told about the sales. The eighth point, 1/4 of output is sold against cash. What it means? It means if 1/4 of output is sold against cash, 3/4 of output is sold for credit, and whatever sales we make on a credit basis, that only will create the debtors. So while calculating the debtors, we will be taking only the credit sales, and credit sales are 3/4. So here we have taken raw materials. Cost of raw material is 1,60,000 into 3/4. 3/4 for credit sales into 8 weeks. So it comes to rupees 9,60,000 in the inner column. Then similarly direct labor. Direct labor cost per week is 60,000 into 3/4 credit sales into 8 weeks. 3,60,000. Overheads 1,20,000 into 3/4 into 8. 7,20,000. Now all the total of all these three elements of cost we take to the outer column, rupees 20,40,000. Then the fifth current asset. In the example, it is given that the company has to maintain a cash and bank balance of rupees 25,000. So here we don't have to make any calculation. The amount is given. We have to simply write the amount as it is. So the fifth current asset will be cash in hand and at bank. It is 25,000. Then we take the total of the outer column and it will be called as total current assets. 6,40,000, 5 lakhs plus 13,60,000 plus 20,40,000 plus 25,000. It comes to rupees 45,65,000. This is total current assets. Now from these total current assets, we deduct the current liabilities to find out the working capital. Now in the current liabilities, there are sundry creditors. Now in the example, it is given the fourth point. Credit allowed by suppliers is 1 month. So the suppliers are the people, the creditors from whom we have taken raw materials on credit. So they give us 1 month period. We are going to make a delay in payment of 1 month. So it will be 4 weeks. And from the suppliers we purchase only raw materials. So while calculating the creditors, we take the cost of raw materials. So here sundry creditors, we write into brackets 4 weeks, and we take the cost of raw materials 1,60,000 per week into 4 weeks. So it comes to rupees 6,40,000. Then second is regarding wages. Now here in the example, the sixth point, lag in payment of wages is 1.5 weeks. You can call it as 1.5 weeks. So wages are paid to the labor. So here we will take only the labor cost. So second current liability will be wages outstanding. It will be 1.5 weeks. So 60,000 into 1.5 weeks, it comes to rupees 90,000. Then in the example, they've given the seventh point, lag in payment of overhead expenses is 1 month. So here we take only the overhead cost. So 1 month is equivalent to 4 weeks, and the overhead cost is rupees 1,20,000 per week into 4. So it comes to rupees 4,80,000. Now the total we have to take of all these three items under the current liabilities to the outer column, 6,40,000 plus 90,000 plus 4,80,000. So the total of current liabilities on the outer column is rupees 12,10,000. So from the current assets we deduct the current liabilities and we get net working capital needed. So that is 45,65,000 minus 12,10,000. So the working capital is rupees 33,55,000.